Hello, friends. I hope you're all doing good. So, welcome back to my channel. So, if you like the videos, please like it and subscribe so that YouTube also can suggest to other people so that they can also get the benefit out of my videos. So, today's topic is about circle of competence. So, you need to know what is your circle of competence so that you don't make a mistake to get into the uncertain or unknown area and you lose your money. So before I start that, just I would like to start with mistakes to avoid. So this is the golden rule of Warren Buffett. What it says is uh, never lose money. This is the rule number one, and rule number two is also same. Never forget rule number one. That's what I mean. Warren Buffett always says that okay, you should never lose money in the never lose your capital in the share market. If you once lose it, then it's either you will get scared or you will never come back to share market as a direct investment. So, and also in the similar lines, I think Charlie Munger also says the same thing. All I want to know is where I am going to die, so I will never go there. That means if you are able to identify where you're going to lose the money, then you are already, work is done. You don't need to make money in all the bets. So you should only in your, lifetime, if you're able to identify some 10, 15 companies, so your work is done. For example, Warren Buffett's is biggest investment is in Apple. It's almost covering 50% of its portfolio. Apart from that, if you see his portfolio, it's not, you would have been not invested more companies, even though you would have also made a mistake. But it's very important that you should never lose the money. I mean, again, I don't believe in stop loss and all. But the first work, what you have to do is identifying the business. That's very very important. So let me go to the second point, or the important topic for the day: circle of competence. If we can't find things within our circle of competence, we don't expand the circle. We will wait. So what this circle of competence means? So there are in India or as well as in the globe, there are multiple business sectors are there. So everybody will not understand everything. Pharmaceutical companies, for example, personally I don't understand. They say there are a lot of inspection is happening in the this manufacturing plant of this medicine. They also say this anda and all. And also similarly, there is a uh, there is a restriction period to get into another medicine and all those things. I don't understand, just to give an example. Similarly, I don't understand, this auto sector and all. They say it is cyclicals. I don't understand why exactly it will become cyclicals like that. So, and also, there are companies. This is the categories. Usually, there are 6,000 companies have been, listed in Indian market, both in Sensex as well as in Nifty. So, in a broad level, this is also one of the quote of Warren Buffett in the letter of 2007. This was also reiterated by Mr. Ramdev Agarwal from the Motilal Oswal company. So, what does it mean is, so he says there are great companies with consistent ROE of around 25 to 25%. So that consists only 10% of the number overall listed companies. Similarly, there are good companies means the consistent ROE of 15%. It is means every year it is happening. This kind of companies are only 15%. So you can think of here, the bad companies are the gruesome companies which go nowhere and see up and downs in profit, around 75% of overall listed companies. So you can think of here, so your main task if you are a direct investor is to avoid these kind of companies. That's why you cannot invest in any company. First of all, you should try to identify these category of companies. Even if you don't get into great companies, because the great companies always will be trading at a very high valuations. You should try to look when the valuations comes down, or where it is a reasonable valuation you can get into them. Even in the worst case, if you are not able to get this one, at least get into good companies where you will get a good ROE. Every year it will keep on increasing. What kind of companies you should get into them. You should try to avoid. That means, as also I showed in the earlier, Charlie Munger's, that statement, he says it's about this one, avoiding bad companies. You should never get into these companies. Another very interesting thing what I found out is 80% of the profit, comes from just 20 companies. If you see in India, there are a lot of, big companies like, HUL, ITC, HDFC Bank, Reliance, all these, listed companies. They are on the Sensex companies. So they are making almost like 80% of the profit. So the balance 20% comes from, other 80% of the companies which are, listed here. So that's why you are very very careful. I think some companies will go nowhere. You could have seen that company was listed 30 years back. If you see, the price is always be going up, sometimes coming down, going up, coming down. Even if you see their sales or maybe the profitability, it will never be, keep on increasing. So that kind of companies, there is no use. Even if, spend effort, after a few years it will come down, there is no use. That's why, I mean, you should be very very careful to, get into the right company by identifying your, circle of competence. So circle of competence is nothing but what companies or what business you will understand. Ultimately, it's called growth engine. If the sales and the profit is keep on increasing in any of the sector or any of the company, you should also see the opportunities. As I was always giving you the examples of, for example, DMart and all. So they have just got, 300 stores all over India. So there is a huge potential for them to expand. Similarly, ITC, they are also getting it into so many different business segments. They were into cigarettes. Later on, they went into, this FMCG business, hotel business, similarly paper, agriculture, and all these things. Even if you see FMCG business, what they are got into, it's almost like, they are making a business at par or more than, HUL. HUL is there from almost like 30 40 years in India. So ITC has come up with, this kind of business. So that's what I mean. That is also competitive advantage. If you see their balance sheet or maybe the revenue growth each year, so it is keep on going up. Similarly, the profit is keep on going up, and also they are distributing profits. So your task is to just, identify into these great or good companies, and you have to invest once and keep quiet. You don't need to do anything. They will work for you. If you see, for example, ITC and all, so the chairman or the most of the, director or the company employees are from IIT, IEM kind of thing. The management people. So they are definitely. I mean, yeah, they will have a lot of, advantage as well as intelligence to run the companies. So they will be working for you, even though you will be, small investors. So just to give you brief, sectors, this I picked up from Skinner.com. I don't want to go through all these things. You can quickly check here. You should try to identify these kind of sectors, and try to go through them. If you are working in a banking sector, or maybe for example FMCG is very easy to understand, how they are doing and all those things. Similarly, cement is there. Cement also people say it is cyclical. Bankings, agrochemicals, IT software, leather, mining, paper, real estate, retail, shipping, steel industry, telecom industry. So many are there. So it's again, up to you to identify which is your circle of competence. Always try to stay there, because if something goes wrong, you understand what is happening there. If you are in out of, circle of competence, you don't know anything what is happening, then it is kind of, disaster. You don't understand anything. You don't know whether to exit or you need to stay there if the price comes down. So you'll get into panic mode because you don't understand the business. So I hope this has helped you to understand, the circle of competence. And also just I'll try to just give you an example also. Few of the businesses, for example, Bajaj Finance. What I mean is, so if I see the revenue growth each year, what is happening, so it is always, going north. So in 2015, for example, it was 5392 crores. And today, I mean, this year, 2023-24 financial year, it is almost like 48,000 crores. So you can think of the growth what has happened. So you should your idea is to, just identify some companies where they keep on growing. The revenue, you should look into this revenue part, and also you should look into the profit part. Profit also keep on growing, And also you can also see the ROE, return on equity. So they have not given here the 10 years, but 5 years return you can see 19% return on equity they have got. And similarly, if you see the stock price of Bajaj Finance is 47%. It's really great returns. And also I can also show you the price how it is going up. You can see here its price keep on going up. It is following the earnings. So if the earning is there, revenue is there, earnings is there, so the price is just follows the business. So it's not other way around. Just let me also try to give you one more bad example. I'm not sure whether uh, I don't want to give recommendation or something. Just I would like to show you the difference between an ordinary company and the other company. Look at this graph. So it is, I can also try to give you max. You see here, 14 in 2007. It was at 15. So it is almost at this price range only. It is going up little bit and coming down, going up, coming down, going up, coming down. It's like this. Similarly, I can also give. This is also one of the example I can just show you. So you can see here, they are going up, going up, going up, and coming down. So these kind of companies you will never make money. That's why you should avoid. I hope this video helped you. Thanks for your support.